Good afternoon, ladies and gentlemen. I invite you to take your seats. Ladies and gentlemen, I am Gordon Shirley, and as chairman of GraceKennedy Limited, it is my pleasure to welcome you to our 2026 annual general meeting. We are very pleased to be hosting the AGM at our GraceKennedy headquarters here at 42 to 56 Harbour Street, which, as you all know, has recently been renamed the Don Webby Building in honor of our former group CEO. A special welcome to shareholders joining us both in person and online. Thank you for being with us today. This afternoon, we will present the financial performance of GraceKennedy for 2025, and our shareholders will vote on matters related to the business of the company. Before we proceed, let us take a moment to reflect on our achievements and give thanks with a selection from Voices of Grace, our GraceKennedy choir, singing "Victory is My Name."
I shall not want. The Lord has provided more than enough, no matter where I go. Oh, victory, victory is my name. My praise is strong, joy overflowing, more than a song. I'm celebrating in the midst of my enemies. I praise. In the midst of my enemies, I praise, I praise. I'm gonna put on my dancing shoes. There's no way that I can lose. I'll be the last one standing, the last one standing. The Lord is a tower and shield for me. With all of the power I'll ever need, no matter where I go. Oh, victory, victory is my name. The Lord is a tower, a shield for me. With all of the power I'll ever need, no matter where I go. Oh, victory, victory is my name. My praise is strong, joy overflowing, more than a song. I'm celebrating in the midst of my enemies. I praise. In the midst of my enemies, I praise, I praise. I'm gonna put on my dancing shoes. There's no way that I can lose. I'll be the last one standing, last one standing. My name, my name. Victory is my name, my name.
My name, my name. Victory is my name, my name.
My name, my name. Victory is my name, my name.
My name, my name. Victory is my name, my name. Goodness and mercy follows me all my days, all my days. Goodness and mercy follows me all my days, all my days. Up ahead and behind, on the left and the right, up ahead and behind, on the left and the right. Goodness and mercy follows me all my days, all my days. Goodness and mercy follows me all my days, all my days. Up ahead and behind, on the left and the right, up ahead and the right, on the left and the right. Midst of my enemies, I'll praise. In the midst of my enemies, I'll praise, I'll praise. I'm gonna put on my dancing shoes. There's no way that I can lose. I'll be the last one standing, last one standing. I'm gonna put on my dancing shoes. There's no way that I can lose. I'll be the last one standing, last one standing.
Thank you, Kristen, Misha, and the entire Voices of Grace choir for that inspiring rendition. 2025 will be remembered as a year that was both challenging and one which strengthened our resilience. Set against a complex global environment and devastating impact of Hurricane Melissa, our team remained committed to our strong governance and prudent risk management and focused on our strategic direction, capital allocation, and investment priorities, ensuring alignment with our long-term ambitions. As I look back on the period, I also pause to reflect on the life and legacy of Donald Webby, who passed away in July 2025. He led with integrity and a deep belief in the potential of our people. His legacy remains firmly embedded in GraceKennedy's vision and will continue to guide us in the years to come. We would like to take a moment of silence to remember our visionary leader who had unwavering dedication to GraceKennedy and Jamaica, which he always referred to as the greatest country in the world. Thank you, ladies and gentlemen. On behalf of the board members, I extend sincere thanks to our team members, customers, partners, and shareholders for your unwavering support, which has been instrumental in GraceKennedy's success. We are GraceKennedy, shaping a stronger future together. Let us now turn to the business of today's meeting. It is my distinct pleasure to introduce our recently appointed director, Dr. Jackie Wright, a globally recognized technology leader whose career has been defined by transformative innovation, strategic vision, and an unwavering commitment to sustainable business growth and societal impact. Dr. Wright has held senior leadership positions at some of the world's most respected organizations, including Microsoft and most recently, McKinsey & Company, where she served as Chief Technology and Platform Officer. Recognized as one of the United Kingdom's most influential Black leaders, and named among the top 50 most powerful women in technology, Dr. Wright is also a passionate advocate for equity, education, and the next generation of talent. Please join me in welcoming Dr. Jackie Wright. Mrs. Gail Moss-Solomon, as you know well, is our General Counsel and Chief Corporate Secretary of GraceKennedy. She will perform the function of Corporate Secretary at today's AGM. Will the Secretary please advise if a quorum is present?
Yes, Chair, I can confirm that the quorum of 3, pursuant to our articles, is in fact present.
Thank you, Mrs. Moss-Solomon. I now invite you to take us through the protocols for today's meeting.
Thank you, Chairman. Good afternoon, everyone. We ask that you adhere to the following protocols for today's AGM. Shareholders who are here in person and their proxies should have all received a paddle. The paddle should be raised for the following reasons: to move or second a motion, to indicate your vote on each resolution, or to indicate that you wish to ask a question. When you registered for today's meeting, whether online or in person, you would have either identified yourself as a shareholder or non-shareholder. As is customary, only shareholders or their duly appointed proxies are permitted to move and second motions and to vote on resolutions. Shareholders and non-shareholders are encouraged to ask questions either in person or via email to gkinvestor@gkco.com. Shareholders online, please vote on resolutions by clicking the for or against button which will appear on your screen. Shareholders who are here in person, please raise your paddles to vote. Shareholders online will have 15 seconds to cast their vote, after which the results for each resolution will be announced. Half an hour has been allotted for the question and answer segment of the meeting. During the Q&A, we will take the questions in the order that they have been received. We will first answer questions we received via email prior to the meeting. Then we will take questions from those who are here in person. Finally, we will respond to questions which we have received via email during the meeting. We encourage you to be brief when asking your questions so that others may also be given the opportunity. Every effort will be made to address all questions this afternoon, time permitting. Thank you to everyone who has already submitted questions. For those participating online, please note that there is still time to submit questions via email, and these should be sent to gkinvestor@gkco.com. For online participants, please also note that to avoid undue disruption, your microphones have been disabled. We invite you to use the chat box at the bottom of your screen to interact with other virtual participants and to make comments. Please note, however, that questions should not be submitted using the chat. Only questions sent via email to gkinvestor@gkco.com will be addressed during the Q&A segment. For our shareholders online, in the event you experience any technical challenges during today's meeting, you may reach out to our team for assistance by calling 876-932-3160 or send an email to gkinvestor@gkco.com. For our shareholders and attendees who are in the room with us today, we kindly ask that you put your phones and other electronic devices in a mode that will not disturb the business of today's meeting. In the event there is an emergency which requires us to leave the building, please follow the instructions of the ushers who will direct you to the nearest exit. Thank you so much for complying with these protocols, and we look forward to a very successful meeting. Finally, today's AGM is being live streamed and recorded to enhance shareholder participation in the AGM and provide an opportunity for persons who are unable to attend the meeting to view today's proceedings. The recording will then be uploaded to the GK YouTube channel. GraceKennedy is committed to protecting your personal information. For further details on how we protect your personal information, you may access a copy of our privacy notice at www.gracekennedy.com, or please send us an email at gkinvestor@gkco.com. Thank you.
Thank you, Mrs. Moss Solomon. The notice of today's AGM was published in newspapers in Jamaica and Trinidad and Tobago, and was also posted on Grace Kennedy's website and the websites of the Jamaica Stock Exchange and Trinidad and Tobago Stock Exchange. The AGM notice also appears in our 2025 annual report. The notice convening the meeting was published within the statutory period of 21 days, and copies are available here today. And with your permission, I will take the notice as read. Thank you, shareholders. We are very pleased to have the directors of GraceKennedy Limited present this afternoon. Mr. Frank James, our Group Chief Executive Officer. Mr. Andrew Masado, our Group Chief Financial Officer. Dr. Paris Loyi Jr., Dr. Indiana Minter-Coy, Mrs. Gina Phillips-Black, Chair of the Corporate Governance and Nomination Committee, Mr. Peter Williams, Chair of the Audit, Risk and Compliance Committee, Dr. Jackie Wright, who you met earlier, and Mrs. Vanessa Rizzioli, who is online. Our Group CEO, Frank James, will now present on the performance of the company for the year ended December 31st, 2025. He will be joined by Andrew Masada, our Group CFO. Frank?
Thank you, Chairman. Good afternoon, shareholders. Good afternoon, GK family, friends, ladies and gentlemen. It is good to see so many familiar faces, and let me add my welcome to you to our 2026 annual general meeting. I spotted our former group chairman and CEO, Mr. Douglas O'Rain, so special welcome to you. Great to see you, sir. Those of you who follow the Observer would have seen him running with the torch, the Woolmer's torch, last week, looking very fit. So it's great to see you, sir. As I get started, this cover that we have here, which is the same cover on our annual report, I think it so well reflects and represents GraceKennedy. I feel like I could make my entire presentation on this cover. It reflects our We Care ethos. It reflects our core values. It reflects our innovation and our focus on our customers and our consumers. It reflects our focus on technology and the drive to become digital and become more operationally excellent. And so this is really, I want to commend the team on this annual report cover. I think it's really, really fantastic. However, I have a little more to share with you than that. So I want to take you today through how we have been enhancing governance and leadership for your group, and how we think this is going to be very key in our continued growth and delivering shareholder value. I also want to share our performance for 2025, and importantly, how we have started the year in 2026. And then to share with you how we are preparing and delivering the GraceKennedy of the future, which is our strategy for the future. So let us start with governance. Professor Shirley already acknowledged our directors, but allow me to do it because our directors have really played a very pivotal role over the last year. They have guided us as the leadership team. They have very openly shared their keen insights and intellect. And so I want to personally thank them for the direction and guidance over the year. It is great to see you, Paris, Indiana, Gina, Peter. We have Vanessa online. And you met our newest director, Dr. Jackie Wright. And so a special welcome, Jackie. Professor Shirley has already shared all the many accolades about Jackie, but I want you to know that those accolades are not just on paper. We have already started to feel the benefit and the effect of Jackie being on the board. And as you can see, technology and AI are reshaping industries around the world. So the value that Jackie brings goes without saying. So again, very special welcome to Jackie. I also want to share with you a very important exercise that we undertook last year. We did a comprehensive review of the boards across the entire GraceKennedy group of companies throughout the world. We looked at how we would align our board structure with the strategies that we have for the future of GraceKennedy. We used data to determine the skill sets and competencies we need and where we had gaps, and went about filling those gaps. And we also at the same time became more efficient as we reduced the number of boards while increasing the effectiveness of our boards. So this was a very important exercise, and it has resulted in a number of appointments of directors to boards and even creation of boards in the group. And I will just share with you the chairpersons of those boards that have either been appointed or will be appointed shortly, some still subject to regulatory approval. So firstly, we have our newly formed GK Foods Jamaica board, and that board is being chaired by Jackie Sharp. Jackie doesn't need introduction to most of us. Former president of Scotia Group Jamaica and current director of Coffee Traders Limited, bringing a wealth of knowledge and experience to the GK Foods Jamaica board, and has been doing an excellent job in that position. We also have Eric Hosin, who is a former group president for life, health, and pension for the Guardian Group across the Caribbean. As you know, GK Life Insurance is a fairly new business for us, and we expect great things from that business. We see it as a great growth area for us. And so to have the knowledge and wealth and experience of Eric, who recently retired as the group president of Guardian Life, is a really great benefit for us, and we're looking forward to his knowledge and insights as we grow that business. Also want to recognize Brendan King, who was appointed as the chairman of First Global Bank. Brendan has spent many years, over 30 years, in the banking industry globally, with Scotiabank in senior executive positions there, and we're very, very happy to have him. He was on the First Global Bank already, adding great value there, and took over from Peter Moses, who retired from the board recently. And then Stephen Gooden, very experienced CEO of NCB Capital Markets, former CEO of NCB Capital Markets, very knowledgeable of the capital markets, has done great things in that industry. And again, as we grow that part of our business, we're looking forward to Stephen's insight and guidance in that area. Rodrigo Estebarana is a global C-suite executive. He had worked for many years with Western Union. He was president of North America for Western Union globally, recently retired, and we wasted no time in getting Rodrigo to come and chair our remittance and money services business. Rodrigo has extensive experience in the remittance business, in the payment space, and is already having a great impact on that business. So again, really excited about having Rodrigo chairing our remittance, bill payment, and currency trading businesses in Jamaica. And then Jeffrey Solomon, who is here as well. Welcome, Jeff. Good to see you. While Jeff comes with his own significant accomplishments as an executive, he brings a particularly unique and personal passion to this role as chair of Grace and Staff Community Development Foundation. And I hope he won't mind my saying, but that's because his dad was very instrumental in forming the Grace and Staff Foundation. So that passion that Jeff brings, which, you know, if you know the work of the foundation, you need passion to do the work that the foundation does. So we're very pleased that Jeff has agreed to chair the Grace and Staff Foundation. So again, I want to show you and assure you that your company is taking governance very seriously. We're making sure that we have strong guidance and strong expertise as we roll out our strategies to develop the GraceKennedy of the future. Importantly, we have our leadership team, and over the last year, this leadership team has really guided the direction of your group, And I want to thank them for the tremendous support that they have given to me in this first year as Group CEO. So you already met Andrew Mesado, our Group Chief Financial Officer. Andrea Coy is joining us online, and Andrea has been doing an excellent job at integrating the two food businesses, our international food business and our domestic business, into one business. Stephen Whittingham is here with us. Stephen has been doing a great job with financial services, really driving innovation and growth in that business. And you met Gail Solomon earlier, who keeps us in line and makes sure we don't get in trouble. And the lady who makes sure that we protect and take care of our greatest strength, which is our people, Annette Morrison, our Group Chief HR Officer. I would appreciate your giving the executive team a round of applause. Thank you very much. So we also, since our last AGM, have made some leadership changes in line, again, with the strategic direction of the group. In particular, we have promoted Tamara Glaves-Husey to be the head of general insurance. As you see, we now have a suite of companies within the general insurance bracket. We have GK General Insurance, which you know very well. You'll recall that we acquired Key Insurance, and we recently brought that private within the group, and we have GK Insurance EC. So Tamara will be responsible for that entire business, formerly head of Key Insurance. And then Shaluk Richards, and I saw Shaluk here earlier today. Shaluk was also in the newspaper today, so it's not just Mr. Rain in the newspaper. A former GK Foundation scholar who is now heading one of our largest business segments in the group. Very excellent job, Shaluk. And we want to really encourage him as he takes on a new area for us, heading life and health insurance as a segment. And then Derval Williams, who is also here with us, our new Chief Audit Executive. So the message here is that your company, your group of companies, is in very, very good hands. So how was the performance for 2025? So without a doubt, we had challenges in 2025, but as I always said to our team, challenges energize us. As an executive of GraceKennedy, challenges energize us. And so despite those challenges, your company walked away with many recognitions and awards throughout the year, and I'll share a few of those with you. We ended the year on a high, winning the Jamaica Stock Exchange Best Practices Award, Governor General Award for Excellence, among a number of other awards, but that one is the big prize. That one means that we were the overall winner. And so we're very pleased with that award, and you'll see the team up there collecting the award from the Jamaica Stock Exchange. We also had Carrie Chris come in and upgrade the company's overall management risk rating. So while they affirmed our scale rating at A, they actually upgraded our management risk rating. And this is really important because it's from strong to highest, and it's a reflection of their assessment of our governance and leadership. Similarly, our corporate governance index has come in at the highest possible rating of AA under the Jamaica Stock Exchange Corporate Governance Index. We continue to be recognized by entities such as the Jamaica Chamber of Commerce and the Jamaica Manufacturers and Exporters Association, winning awards for sustainability, ESG, and being recognized GK General Insurance as Best of Chamber in the large category. And we saw our Duns River Lemon Jerk Seasoning winning a Guild of Fine Food Great Taste Award. This is now in second time in a row. Last year, I would have been telling you about our honey jerk seasoning, and this year I'm telling you about our Duns River Lemon Jerk Seasoning, and just so that you see it in person, live, you can see our product here. So we're very proud of our ability to be winning on the global stage a number of these awards, which really speaks to the quality of our products that we deliver to our consumers. Very importantly, during 2025, we were able to honor Don. We were able to honor our former group CEO. Throughout the year, a number of organizations recognized him, the stock exchange, the PSOJ, the government. But the highlight, I think, for us as a GK family was the renaming of our headquarters to the Don Webby building in February of this year. And so I'm sure Don is smiling down as we are now having our AGM for the first time with this building named the Don Webby building. And so that was a real great honor. You'll see the picture there of us along with Don's family, the board, and the executive as we unveiled the naming of the building. I want to jump into the financial highlights and see how we did in terms of the numbers. In terms of our revenue, you'll see that we continue to grow our revenue steadily year over year. For 2025, our revenue grew $10.7 billion, or 6.4%. Thank you. Yes, the applause are appreciated. It encourage the management team to even improve that for 2026. That revenue has been driven by a number of businesses across the group, and I'll share a little breakdown of it for you. Jamaica continues to be the lion's share of the revenue at just under 56%. But if you look at the numbers, you will see that it has actually reduced from 58% in 2024 to 56%. Now, importantly, this is not because Jamaica didn't grow. Jamaica did grow, but our international markets grew faster than Jamaica, which is a strategy that we have outlined to you over a number of years, that while we continue to grow Jamaica, in fact, over the last few years, Jamaica had been growing even faster, we are expecting faster growth outside. So we saw strong double-digit growth in North America and in UK during 2025. So you'll see that both of those increased from 24% for North America to 25.3%, and from 11.5% to 12.2% for the UK. So we're seeing good growth in those international markets while we continue to grow the Jamaican market. In terms of our business segments, food continues to be the dominant driver of revenue, but our insurance segment is now the second largest contributor to revenue, and as you can see, growing very strong at a 17% growth rate. Our banking and investment was also up, so 3 of our 4 segments growing in revenue. Money services being the only segment that was down. And that we have been sharing with you, that the money services industry, the remittance industry in particular, has been changing globally. And as a result of that, we're seeing the revenue per transaction coming down in that business. So while we continue to grow market share in that business, we still see the revenue coming down. And as I'll share with you later, we have been actively pursuing the strategy and remain very confident in our ability to see this business continue to improve and turn around. So what about profit? Our profits for the year were down. You'll see our profits down there, pre-tax 16%. And this was primarily as a result of the impact of Hurricane Melissa and a number of one-off items that would have impacted us during the year. In particular, insurance claims would have been elevated. As you would expect, we have our 2 general insurance companies, GK General Insurance and Key Insurance, and so they would have been impacted with higher insurance claims. I want to highlight, though, that both GK General Insurance and Key Insurance remained profitable even after the hurricane, and this really reflects the strength of our reinsurance program, which protected the capital of those businesses. So while our profits were impacted, the businesses remained profitable and strong. The other area that was impacted was our meats factory in the west of the island in Savlamar, which was damaged by the hurricane and had to close for 2 months. That's a very profitable factory for us. That's where our famous Vienna sausages, frankfurters, hams come from. And so those 2 items reflected in a PBT impact of about $1.4 billion. Adjusting for that, those one-time impacts, you would see that our profits would have been down just about 5%. And what would be the cause of that? Well, as I mentioned, the margin squeezing in our money services business. Also, during the year, we found higher logistics and warehousing costs in our food business, which we got under control by the 3rd quarter. And we also saw an increase in our provision for credit losses. So those would be the key factors impacting the performance once you adjust for the impact of Hurricane Melissa. Now, interestingly, as a result of that, for the first time, we're actually seeing profits outside of Jamaica being more than profits inside Jamaica. So profits outside Jamaica for 2025 was 51%. But I need to add very quickly that this really reflects the impact of Hurricane Melissa, because the full impact of Melissa, of course, was in Jamaica. If you again adjust for that, then profits outside Jamaica would have been 45%. And so Jamaica would continue to be large, but you will see that profits outside Jamaica, even on this adjusted basis, have grown quite meaningfully from 41% to 45%. And that's really because we have seen strong double-digit growth in profits in our three major international food markets, the UK, the US, and Canada, all showing double-digit growth in profits. So very strong performance there. And as we have outlined, we expect the growth to continue in Jamaica, but faster outside, both for revenue and for profit. And so that translated, of course, to our profit attributable to stockholders, which again, when adjusted for Hurricane Melissa, would be about a 5% reduction. Importantly, less than the reduction that was up to the third quarter, which really showed that we have started turning the corner in the fourth quarter. And so I want to share this slide with you, where we're just looking at Q4 alone, 2025. And adjusting for the one-off impact for Hurricane Melissa, you'd see that our profits for Q4 actually would have grown. What resulted in this? One, we accelerated our revenue growth. So revenue increased about 8% up to the third quarter. It was just under 6%. And we got control of those logistics and warehousing costs that I mentioned to you by the end of the third quarter. So we saw the benefit of that in the food business in the fourth quarter. And we managed our costs very well, especially in our money services business. And when we presented this earlier in the year at our investor briefing, I said we would be taking that same momentum into our first quarter for 2026. And I'm pleased to say that we have done just that. So our first quarter results, or Q1 2026 results versus our Q1 2025 results, shows that revenue continues to grow, growing at just about 7.5%, or $3.3 billion. Three of our four business segments showing growth: food, banking and investments, and insurance. Money services, again, similar issues. And just to give you a little more flavor of that, we are seeing the market dynamics change in some of our markets. So, for example, in Guyana, with their find of oil, is now becoming an outbound market. Guyana traditionally had been an inbound market. We are growing the outbound at well over 60%. So we are taking market share, but because it's becoming an outbound and we earn differently for outbound than inbound, we're seeing the impact on revenue. Jamaica, we are definitely growing our market share in Jamaica. We are growing faster than the market in Jamaica. So our key markets, we are growing market share, but we see the pressure on our revenue. How has this translated into profits? We have seen for the first quarter a 12% growth in profits. So we are pleased with the start, but it is just the first quarter, and we intend to continue to deliver throughout the rest of the year. Three of our four segments up in profits. You will notice that food was down for the quarter, and marginally down, but the key to that is really our domestic foods business. In fact, our international food business was up significantly in profits. But in our domestic food business, we still are facing the challenge of the meats factory, which, while we have restarted meats, we're very pleased that we're able to restart meats by the end of last year, but we're not back up to full capacity at meats as we rebuild our capacity there. And so that factory, the profits would have been down quite significantly. Also, we had the Hilo Fairview store, which was closed as a result and remains closed at this time of Hurricane Melissa because of fairly extensive damage. So that has also impacted it. But we also faced quite a few supply constraints on some key products, and that has also impacted the performance for the domestic segment of the food business. And therefore, you are seeing the impact on our profits there. Banking and investments and insurance, double-digit growth, very strong performance for the first quarter. And money services, while a fairly marginal growth, is a very important sign that we have actually seen that increase. Now, it is the first quarter, lots of work to be done. Executive team not getting complacent at all, but very importantly, we saw the effect of the strategies that we have been executing in that business. One, driving our digital performance. Two, really focusing on managing our costs. And three, diversifying our income streams. And we have started to see the benefit of that. So for the first quarter, money services showing a marginal increase in profits. And of course, that translated to our profit attributable to stockholders for the first quarter. The stock price continues to be a challenge, as you see, moving quite in line over the years with the market. We continue to view the stock as undervalued, and we feel our focus needs to be on executing our strategy well, delivering the financial performance, and we believe that the stock price will eventually follow the performance of the company. So that is where your executive is focused as we seek to drive the performance of the group. So how did we achieve this financial performance? What were the key business highlights? We continue to focus on investing in our brands. The growth of the Grace and Grace-owned brands, very important. You'll see there that key brands such as Grace, Lafay, Nourishment, and Caribbean Choice all grew year over year. Caribbean Choice really playing on the value innovation, and we're seeing high double-digit growth in 2025 for that. How have we achieved that? Innovation. We said that innovation was going to be a key part of our strategy, and we have delivered that in 2025. You'll see a number of the products there. One of the ones I'm particularly excited about is our green seasoning, one of the most recent innovations, and this is coming from our farmers here in Jamaica and our Gap factory here in Jamaica. And this is not a product that's been limited to Jamaica. We are actually expanding this and have now moved it into our international markets, and we know that this is going to do very well. So we are delivering on the innovation mandate and promise. The other area we spoke about last year was expanding geographically. And so in Canada, we have moved into Quebec. You will find us in Sobeys, you will find us in IGA, you will find us in Metro. In fact, the 4 major chains in Quebec, we are in there. We have delivered on expanding in the US to areas like Georgia and New England. But we also said in the markets that we are already in, we need to deepen our penetration. And so we have delivered over an additional 950 stores in our major markets, the US, UK, and Canada. And here in Jamaica, over 500 new points of sale. So we continue to drive the expansion of our Grace and Grace-owned brands. Digital transformation, key to the strategy, and we had indicated that we're going to be driving new products for our GK1 app, which is our mobile app that you can go and do all things in one place. So you'll find now you have GK1 Send, where you can send to anywhere in the world from your phone, sitting in your bedroom, sitting on the beach, and you don't have to go into any physical location, and it is sent immediately, literally in minutes. You can renew your general insurance. We now have the GK1 Marketplace, where you can find things outside of GraceKennedy, all types of offerings for your own personal lifestyle needs, whether it's groceries, events, etc. And we also said that we're going to be expanding our GK1 app into new geographies. Last year, we told you 3 new markets. We have already expanded to Guyana. And this year, we have started a launch in Trinidad and Cayman, a soft launch, and we'll be seeing a bigger launch during 2026. We also said that we need to transform our GraceKennedy Money Services business model because we're seeing how that industry is changing. And a big part of that transformation would be driving the growth of digital, and in particular, digital through our GK1 app. And we have delivered on that with the GK1 app growing at over 75% for remittances. GK1 remains the #1 digital wallet for remittances in Jamaica. But we also said that our omni-channel approach, which means our physical locations are going to also continue to be important, but we needed to do it differently, which means we will be finding strategic partners. And that has also been doing well with double-digit growth in partners like Courts. So you can go to Courts now and you can do your Western Union transactions. CNWJ and high-low, some of our high-low locations are other areas you can go. So we continue the transformation of that business model. M&A, we concluded 2 during the year, fully buying out our Catherine Speak business, so we now own 100%, and delisting Key Insurance, and we now own 98.9% as we work on synergies between Key and GK General Insurance. This strategic partnership has done very well for us. Scotia Protect is an online platform which allows, a digital platform which allows Scotia's customers to be able to get their insurance from GK General totally hassle-free. And we have seen an over 50% growth in that business in Jamaica. But last year we said here that we're going to be expanding our partnership with Scotia to 3 new territories, and we did achieve that in November of last year, going into the Bahamas, Barbados, and Turks and Caicos. So we are now in a total of 4 markets with this product. Operational efficiency. While we didn't achieve the PBT to sales that we had wanted as a result, as we showed you earlier, primarily of Hurricane Melissa, we did take a number of very important strategic steps to improve our operational efficiency and our excellence. We have commissioned our new refrigeration at the DC and continued the expansion of the DC to meet the growing demand in our distribution center. Our investment in S/4HANA, our operating system for our food business and our corporate office, has been a major investment. We have completed the implementation, and now we are focused on driving adoption of that tool. We are seeing where it is benefiting us in production planning, in supply chain, in many key areas. We commenced the pilot of First Global Bank's digital onboarding and loan automation system, and I'll tell you a little more about that later. And we had said that we should realize energy savings of over $600,000. We actually realized savings of over $700,000 last year. And this in spite of the fact that our plant at Meats, or solar plant at Meats and at Hilo Fairview were also destroyed by Melissa, so we would have realized even greater savings. This will impact our target, which we shared with you, of $1 million in savings, but we will get back on track. We're going to build back the solar plants this year and get back on track towards meeting that target, even though it will be delayed. Our international competitiveness, we have expanded our water business outside of Jamaica, growing at over 60%, to Barbados, BVI, Cayman Islands, and Guyana. And very exciting was our inaugural export of meat to Ghana. Now, we've been selling products to Ghana for many years, but this is the first time that we're selling our frozen products. So we're talking about our ham, our bacon, our sausages, frankfurters going to Ghana. And you'll notice Ghana coming up a number of times. We launched GK1 in Ghana, water to Ghana, meats to Ghana. Ghana is an important economy in the region, and we are finding the opportunities there, and we have a team that is focused on really driving the growth opportunities in Guyana. None of this happens without our people. None of the performance that you have seen is possible without our people. And so we continue to focus on how we engage our people, how we develop our people, how we create the leaders of the future, and how we ensure strong succession. So you'll see where we have celebrated Employee Appreciation Week. We have our Spark team that continues to engage the teams through activities that bring us together as a team, but also we're investing in our people through training and development, 105 participants in our signature leadership development programs in 2025. And then, driven by our purpose, we always have to remember Grace We Care. So having performed, having delivered financial results, we are always making sure that we give back in our We Care philosophy. And key to that is our sustainability strategy. It's been a part of us for many years, but we have formalized it under the heading of sustainability. And we have a number of areas we're focusing on: adhering to the highest standards of integrity, providing a safe, diverse, and respectful workplace, promoting responsible products and services, being environmental stewards, very important, and enabling inclusive and vibrant communities. You'll see there that we achieved 3,390 volunteer hours. Now, this is up from 2,300 350 the year before. So you can see big improvement. And our investment in our community projects, 345 million up from 298 million last year. And this is, while largely in Jamaica, it's actually investments that we make in communities wherever we are in the world. A lot of our sustainability initiatives are really driven by our two foundations, and they have been doing fantastic work. The GraceKennedy Foundation has really focused a lot on the environment, and we have been able, by putting up those barriers that you see in that picture in the top right-hand corner, by putting up those barriers at the mouths of gullies, we have been able to remove 5 million kilograms of waste from getting into the harbor. Importantly, though, this year, meaning 2025, we have taken a very deliberate initiative around how we educate our people, and in particular, how we educate young people about the importance of the environment, so that this is not always such an uphill battle. Because if we start with the young people and they appreciate it, then it will become a natural part of the way they behave. Now, I'm not sure what hopscotch has to do with teaching young people, but that's what they had me doing for some young students, to get them to appreciate the importance of taking care of the environment. So we're being very deliberate about ensuring that the generation coming up, and the communities today, but in particular the generation coming up, understands that the importance of that. We talk about GraceKennedy growing global. Our foundations are going global as well. And we're very excited that our Kingston Harbour cleanup project was on the Visionaries on CBS last year. Grace and Staff Community Development Foundation. I don't know if Caroline was here when we were talking about GraceKennedy Foundation. I'm not seeing her, but I'm seeing Sandrina Davis, our CEO. Caroline is here. Caroline is blocked. I'd love us to give Caroline a round of applause for the work she has been doing with the GraceKennedy Foundation, and at the same time to big up Sandrina, who has been doing an excellent job with our Grace and Staff Foundation. Importantly, we don't talk a lot about the STEM Center, but the STEM Center we have had for a number of years, and it is really playing a critical role in helping the children in the inner city to understand science, technology, engineering, math. And this, we know, is, I said, a way of the future, but it's even here today. And so you'll see us there, the minister is there as well, and the children were being taught about coding and using microbit coding. So this is some of the very practical work that the STEM Center and the Grace and Staff Foundation is doing. Another area we don't spend a lot of time on is counseling and mental health, but it's a serious area. A lot of persons with trauma, and so we have had 470 counseling sessions provided to members of the communities in which we operate. And I want to take this opportunity to recognize Curtis Sweeney, Dr. Curtis Sweeney, who has played a critical role in that. He claims that he's retiring this year, and while that is certainly extremely well-deserved, I know that I will certainly be calling on Curtis, but we want to really thank Curtis for a tremendous, tremendous amount of outpouring of love and support over decades, literally, with the GraceKennedy Group, and we want to really acknowledge Curtis. Is Curtis here today? Not here with us today, but we acknowledge the work that Curtis has done and continues to do. We can't speak about 2025 and not speak about Hurricane Melissa. A huge impact on Jamaica, a huge impact on all of us, but in particular on those in the western side of the island. And when this happened, our first priority as an executive team was the safety of our team members. We had 681 team members in the areas affected by Hurricane Melissa, and the first priority was to account for all of them. And I'm really very happy to be able to tell you that we were able to account for every last 681 members. I see Maria Love here, who was instrumental in going out and finding our people. We literally had to go and find them because communications were down. But you know, what was really meaningful for me is in the days immediately after the hurricane, as I went into those communities and met with our staff members who were out working because our businesses opened back right after the hurricane. And as they told me their stories of real loss, not just loss of physical property, but in some cases, loss of family members. And these team members were out. And I asked, how come you're out under the circumstances that you're facing? And their response was, the community needs us. And I was really impressed with our GraceKennedy team members that they saw the greater need for Jamaica and for the community, that they would come out in the midst of their own challenges to support the community. And I really want to give a big thank you to my entire GraceKennedy team for the tremendous outpouring of support that was given during Hurricane Melissa. That support was translated into money, of course, where we stepped in and we decided to support with over $200 million in relief and recovery efforts. That was supported very well by many of our partners across the food and financial services business. We're talking about P&G, Frito-Lay, Western Union, a number of partners who really stepped up to the plate and gave support. You'll see there a number of P&G products that are being given to the Minister of Health, and that was this year. So we continue our support, not just immediately after the hurricane, but even in this year, as this is a long journey for Jamaica. So I want to share with you now a bit about our strategy and how your executive, guided by the board, we are looking to create the GK of the future. And to do so, we are being very deliberate about shaping a stronger future together. That's our theme for this year. We are GraceKennedy, shaping a stronger future together. And in a dynamic environment like we operate in, it is important that we take control and are very deliberate about shaping the future that we want, because the world is changing extremely fast. And so we have taken the approach that we are going to understand that environment fully, understand the changes, but we are going to focus on the things that we have control over. And when we talk about the things that we have control over, what we see is opportunity. So in the midst of all of these changes and all of these challenging environments, we see opportunity. What are some of these global changes that we don't have control over? Well, we're probably in the highest geopolitically tense period that most of us would have experienced in our generation. We're seeing the impact that is having on energy costs. We're seeing the impact that is having on supply of product, on the ability to move product, on migration patterns, which has been very essential to the way GraceKennedy has grown over the last years. Trade environment is changing. We're seeing the implementation of tariffs and the reversal of that. This is creating friction in the way products move. It's creating additional cost of our products. It is creating delays in how we are able to access products and services. We're seeing unprecedented events like Hurricane Melissa, which was the largest in Jamaica's history, the third largest in the world's history, and that has implications for our business continuity plans. It has implications for our infrastructure. We talked about artificial and intelligence and remittance landscape. That's impacting the way we work. So where do we see opportunities? We see opportunities in how we can leverage technology, how we can allocate our capital to improve our productivity and be more efficient, and to be able to deliver better than the next person. How can we create products that remove friction? How can we create services that make it easier for our customers to do business and to transact with each other? Data, there are so many moving parts. If we have a way that we can bring that data together, understand that data, analyze that data, and make decisions faster than our competitors, then we have an advantage. We have seen the benefit of partnerships, and we're going to be exploring those more as persons focus on the areas that they are best at, and we focus on the areas that we are best at. And, of course, ensuring strong risk mitigation and sustainability. So we see opportunities as we look at the changing environment. And so last year, as an executive team, we spent quite a lot of time really talking about creating the GraceKennedy of the future and the bold moves that we would need to take as an executive to be able to realize that future. And so we recognize, first of all, the strength of our legacy. We are GraceKennedy, a very strong legacy and a very strong brand, and very importantly, the strength of our team. And it is that team that is going to build on this legacy and build on that brand. And for us, team has a very clear meaning. T, togetherness, which is a force stronger than any hurricane. We are a united people, united by a shared vision and purpose for GraceKennedy, delivering E, excellence, which means the highest standards wherever we operate in the world, grounded by accountability, which means we are not daunted by the changing environment, but we look ourselves in the mirror and say, we can get that done, and we go out there, take responsibility for it, and get it done. And then performing with mettle, which really means taking those bold decisions, those tough decisions, and ensuring that we deliver on getting to our vision and purpose. All of this, of course, is underpinned by our core values of honesty, integrity, trust, commitment, humility, and respect, our we care ethos. So with that foundation, we have identified 4 key strategic pillars. And we are confident that if we execute effectively on these 4 strategic pillars, we will realize our strategic objectives. 1, customer centricity and innovation. We are obsessed with understanding our customers' needs and determining ways to meet those needs and exceed their expectations through innovation in both products and services. 2, operational excellence. We're going to be using technology. We're going to allocate our capital effectively. We're going to have strong governance and risk management that we can efficiently and effectively deliver our products and services and operate our business. 3, purpose-driven organization. And this really speaks to our people and having a highly engaged, united team, T-E-A-M team, that is driving the vision and purpose of GraceKennedy Group. And finally, sustainability. We're not just building GraceKennedy for today or next month or even next year. We're building the GraceKennedy of the future. So sustainability and how we care for our communities and the wider world is an important part of our strategy. So getting those 4 strategic pillars right, executing on them, we will be able to realize our main strategic objectives of becoming a globally recognized multicultural food brand and Caribbean leader in food innovation and sustainability. And our other strategic objective of becoming the region's leading digital financial group, powered by technology and customer trust, making financial services simpler and more accessible. When we have achieved those 2 strategic objectives, then it would mean that we have accomplished our vision and our purpose, which is to become the #1 Caribbean brand in the world, enriching lives through trusted food and financial services. That is the vision and purpose of your company, and it's a bold and exciting vision and bold and exciting future that your executive team is ready to take on. So we're very clear that as we take that to the world, we will have our vision and purpose to be the #1 Caribbean brand in the world. It will be, what will it look like? It will look like a globally recognized multicultural food brand, a regional leading digital financial group. And we will get there by executing against those 4 strategic pillars underpinned by our core values. I want to share some of the specifics with you when we say how we're going to get there. So we talk about growing our Grace and Grace-owned brands, key part of customer centricity and innovation. And so this year you will see more new products coming out, more innovation, more expansion into new channels and driving new geographies. We spoke about Quebec in Canada. Quebec is the 2nd largest province by population size, and you have strong African, Haitian populations there. And so our multicultural approach, which means we're not just focused on the diaspora of Jamaica or the Caribbean, but we're focused on those persons who want to experience Jamaican food and Caribbean cuisine and other ethnic cuisines like our Latin American, Haitian products. The other area is insurance. We have expanded our insurance business in general insurance, as I mentioned, to 3 new markets, and we expect that to deliver really well for us starting this year. We have already started to see the impact, and we think that has the potential to actually double the size of that strategic partnership versus what we have done in Jamaica. So it's a big game changer for us, and we're very excited about that. Asset management is a big growth area, and before the year is out, you'll be hearing more announcements about how we're going to be growing our asset management business. On the food side, our high-low stores, we continue to evaluate the white spaces across Jamaica, and we'll continue to expand our high-low food stores network. Digital solutions will continue to play a key part, especially in our financial services group. The full rollout of our DOLA, which is our loan automation and onboarding software, digital software, will be rolled out fully this year. And so our customers can now get the process of opening savings accounts and applying for credit cards without ever walking into the bank. We're going to also be introducing our new core insurance platform in our GK Life business. And this is a very important step. You'll recall we did this acquisition a few years ago, and this is a growth area for us. This new platform is going to allow us to create new products. It's going to allow us to go into new partnerships, and it's going to allow us to go into new places. So we're going to be expanding, and even as early as this year, we're going to be expanding our GK Life relationship with another partner in Barbados, Signia Globe. So that will be happening this year. Now to the right of the screen, you will see GK1 top-ups. And when you think of top-ups, you normally think of mobile phones. You top up your phone. But there are so many other uses for top-ups. A parent can not only top up their child's phone, but can top up their bus card and can top up their school card for shopping and buying lunch at school, and then send them off to school, and everything can be done digitally. They can also then top up their own Jamaica Highway pass and get on their way. So there are lots of uses for top-ups. And so we are going to be, and this is hot off the press, first time being announced, we will be launching in June our new top-up feature in the GK1 app, and I want to share a little about that with you.
From the GK1 home screen, tap the new top-up option, see the top-up listings and select from the list of prepaid services available. Enter the account number you'd like to top up. You can also choose to securely save the number for future transactions, making repeat top-ups even faster. Next, choose the amount you'd like to purchase. A list of available top-up values is displayed for quick and easy selection. Select your preferred amount and continue to payment. Here you can choose to pay with your GK1 wallet balance or any Visa, MasterCard debit or credit card. Biometric authentication makes the experience simpler, faster and secure. Congratulations, you have topped up your account. Credit is reflected instantly with the service provider. With GK1 Top Up, staying connected is now simpler than ever. No wait, no lines, no fees, top up anytime, anywhere with GK1.
All right, so you heard it first here at the AGM, and you can look forward to that being launched as early as next month. So our digital transformation is underway. We are finding ways to make things more convenient for our customers. One place that you can go right there with your mobile phone and do all these transactions instead of going to multiple locations. What we're doing with GK1 is really keep building an ecosystem, both within the GraceKennedy Group for all the products and services within the GraceKennedy Group, but also outside of the GraceKennedy Group for all of the activities and lifestyle activities that our customers need to do. We also want to drive growth through mergers and acquisitions, and you would have heard earlier this year that we already completed the acquisition of the 50% stake in dairy that Frontier held. This has been a key strategic move for us and has already benefited. So our Q1 performance was significantly enhanced by the acquisition of dairy, meaning the performance of dairy now owning 100%. But it's important because this business allows us to also drive key areas of growth that we've been focusing on. Innovation. You'll see a number of products there, and some of those products are very new, like our Easy Open Tin. But we have also, this year, just introduced this product. You'll just start to find it on shelves. Our Grace Cheddar Cheese Sauce, so whether it's on your hot dogs or on your nachos or tacos or whatever you and the kids want to enjoy, you have this now available. So this is just launched this year, and I'm very excited about it. I know it's going to do extremely well. So this business is also providing the innovation. But the other area it's driving is export growth. Over the last 6 years, the export revenue for dairy has more than doubled and now accounts for about 25% of the revenue of dairy. And we expect to continue to grow the export potential of this business. So a profitable business that we plan to continue to grow. You know it for tasty cheese, but there are a wide variety of products. This is really great yogurt. It's a big product for dairy, accounting, I think, for over 15% of its revenue. So M&A continues to be important. We continue to work with our investment bankers and to also look at direct partnerships and speak directly with potential acquisition targets. Operational excellence. A big part of this, multifaceted, but what I want to highlight here is our focus on AI and how that is really changing the world. And so AI, we have already actively started to utilize AI, and we are exploring use cases around things like fraud detection, around repeatable activities like reconciliations, a number of areas, including how to find Grace corned beef in Hilo. And you can see Stephen Whittingham and myself being personally led to the Grace corned beef by our AI robot, is the word right, Deidre? So this was a pilot that we did on AI Day. So it has not been launched. I don't want you to go to your next Hilo and say, where is the robot? The robots are not out in Hilo as yet, but we wanted to pilot this. And this is what we're doing. We're testing different things, determining if they're going to meet the needs of our customers, and then choosing how we roll them out. And so we see the benefits of AI as being significant. But this AI Day, what we focused on is what we call AI literacy. And it means that we want all our employees, every employee, whatever level you are within the organization, to have an appreciation and understanding of AI. Because our belief is that AI is going to be as common as email in a few years. So if you think of when email came out and it was just reserved for a few, today everybody uses email. And so that's how we are viewing AI. Now, this doesn't mean we're going to roll out all AI features to every employee, but it does mean that every employee must understand AI and have an appreciation, and we call that AI literacy. And so that's a big focus for us. We also see AI as a way of really enhancing the work of our team members as opposed to replacing team members, which is a big debate these days. We see it as really allowing team members to operate at an even higher level. It means that they can get decisions made faster because they can get all the data they need put together in a succinct way with the necessary recommendations to guide those decisions. It means that the kind of repeatable activities that don't add much value can be done while they spend their time on the higher value added activities. Now, does this mean that the employees don't have a role to play? No, it means they now also have to be upskilled, and they may need retraining and so on. So there are implications for our team members. But for us, AI is really to enhance the effectiveness of our team members as opposed to replacing our team members. Very important things like cybersecurity, data governance, or processes, and all very active in those areas of operational excellence. Again, to get this done, we need our people. And so a purpose-driven organization is going to really drive us to focus on how we develop our people for the future. We have to be very strategic, and that first item, strategic workforce plan. The world is changing very fast, and therefore the skill sets that we are going to need today and in the future are different, and therefore we need to be preparing, recruiting, upskilling, training our team members in that right way. At the same time, we need to be taking care of their well-being in what is a very dynamic and at times challenging environment. And then finally, sustainability. We want sustainability to be incorporated in every element of our operations. We have the sustainability framework. We have the metrics. We are measuring our performance against them. And we're going to be continued to focus on driving that. And you know, what is great about sustainability is it doesn't have to be adverse to the growth and profitability of the business. In fact, it can complement, it complements it. And we have seen it in our energy projects, where it is good for the environment and it is also saving our energy cost. We're also seeing it with our GAP project, where we're looking at fertilizer, how we can take the waste from our GAP Hounslow factory and create an organic fertilizer. And the team is actually quite well advanced with that. We have started testing it in our agro-park, and a number of farmers are seeing improved yields and better quality products. And we might even move towards commercialization. So that's something that we can look out for. Can't talk about our community impact without talking about champs. We had a great champs this year. We're very pleased to continue to support our young people in this way, the future of Jamaica. And we see our $200 million investment as just that, an investment in the youth and the future of Jamaica. So with that, I want to share with you what is most important for all of what we want to achieve, and that is that we remain guided by our core values. These core values determine how we treat each other. These core values determine how we make decisions each and every day. These core values determine what we invest in and what we don't invest in. These core values are integral to who we are as GraceKennedy. Your core values, our core values are honesty, integrity, trust, commitment, humility, and respect. And we are unwavering in those core values. Because of those core values, we've been around 104 years, and we're going to be around for more than 104 years going forward. Before I close, at our AGM, I could not let the opportunity pass to remember a true stalwart of our AGMs here at GraceKennedy. And indeed, although we like to claim him, of many AGMs across Jamaica. Mr. Orrit Staple, who passed away earlier this year, was a person who would not miss an AGM and who would read every page of the annual report and would come here and would say, Mr. Chairman, would you turn with me to page 210? And he would take us through very important questions, playing a critical role, which was really holding us as the leaders and directors of GraceKennedy, the persons you have appointed to lead your company, holding us accountable to you, the shareholders. He played a critical role supporting and advocating for minority shareholders and in driving good corporate governance in Jamaica. I can say that not only GraceKennedy, but many companies across Jamaica are better and stronger as a result of the benefit of Mr. Orrit Staple. And so we want to recognize his contribution today. So in closing, let me say thank you. First of all, thank you to our GraceKennedy team. None of what I come up here and present can happen without them, and so I want to thank them. I want to thank our board, who has been very supportive over this first year of my tenure. I want to thank our customers who continue to buy our products and our services and to grow our business. Our shareholders, all of you who continue to be so supportive of the GraceKennedy Group, and our partners and the communities we serve around the world. I am very confident that the future is very bright for your company, GraceKennedy. We are GraceKennedy, shaping a stronger future together. Thank you all very much for your attention. I'm now very happy to welcome our Group CFO, Mr. Andrew Mesado, to give you some more insights into the numbers. Andrew?
Okay, good afternoon, everyone. Thanks, Frank, and good afternoon to you, shareholders, investors, and members of the GK family. So this afternoon, I'm just going to do a brief recap on our financial results for 2025. You've heard a lot of it earlier, so this will just reinforce some of the points that were made, and then I'll touch again very briefly on our first quarter results. So the first thing I want to do is give you some of the performance highlights for 2025. As you can see, they have been mixed. Firstly, revenue showing good growth, over 6%, growing by $10.9 billion to $177.8 billion in revenue. This was led in large part by our food division, which grew by just under $8 billion. Now, in terms of our profit from operations, you'll see that it was a decline, an 18.7% decline. This was spoken about earlier, but the major ones I'd want to highlight would be in regard to Hurricane Melissa. We did see a significant impact across all our business lines because of the hurricane. Firstly, on the food side, you would have seen that a couple of our companies would have had to close temporarily. Our high-low food store in Fairview, Mobay, was closed and continues to be closed at this point in time. And our meat plant, which produces a lot of our popular products like Vienna's and Frank's, also closed, but thankfully has reopened subsequently. And then on the insurance side, you would have seen significant insurance claims would have come in. Now, our insurance companies are well reinsured and also well capitalized. So even though we did have significant expenses related to claims from customers, all of our insurance companies remained profitable, and all of them were adequately capitalized and met all their regulatory ratios. And then you would have seen other impacts. We did have higher than expected logistics and warehouse costs in 2025. And so these would have all impacted our profit from operations, down 18.7%. Nonetheless, we did make over $10 billion in profits. And you see that this also would have affected our profit before tax and our net profit attributable to shareholders. Our asset position continues to be strong and grew by almost $30 billion. It's now over $260 billion, a 12.7% increase. Some of the major highlights here would have been our cash and deposits, indicating a very strong liquidity position. Also, we would have had good loan growth to our customers through our commercial bank. And then you'd have seen our receivables go up. And the main reason here in terms of receivables going up would relate to our reinsurance recoveries from the placements with our reinsurers. And then our stockholders' equity grew by 6.8% to $93 billion. And what you'll see here is that despite a reduction in profitability, our equity has increased, which gives us a very strong financial footing to go forward. And just to lead in from that, I would say in terms of our dividend payout, you would see that our dividends over the past several years have been very consistent. And in 2025, we were able to maintain our dividends despite a dip in profitability. And that's really a testament to our strong equity position and our good liquidity and cash management. And so this was a very important factor for us to maintain. I'll also give a quick update on 2026. We are going to pay our second interim dividend on the 19th of June, next month. And this interim dividend will actually represent an increase in our dividend payout compared to the second quarter of last year. And so we're going to be paying out a dividend of 55 cents per stock unit, or approximately $543 million in June. And this will bring our year-to-date total up to $1.08 billion compared to 1.06 last year for the same half-year period. So again, a good showing in terms of dividend payout. Now, I want to just comment a little bit, drill down into the revenue by our segments. We spoke briefly about this earlier, but what you'll see here is, firstly, I'll comment on money services. You'll see a 4% decline for money services. And this is really in relation to some of the transaction volumes coming down. And this is a kind of market issue because, as you heard earlier from Frank, we actually are growing our market share in many territories. But you would see that there is a kind of net reduction in inflows across the region in certain of our key markets. One of them was mentioned earlier, which is Ghana. However, not all are going down. We do have some that are growing quite a bit. One example is in Bahamas. We're seeing double-digit growth in transaction volumes there for our business. Insurance, you see good growth for insurance, growing by over 17%, led primarily by our general insurance businesses, but also the other insurance companies or brokerage, as well as our health and life business. And then for banking and investments, on the banking side, we did have a good growth in our loan portfolio, good growth in our overall revenue, as well as deposits. Where we did see some softness in the market was on the investment side, where, as you know, if you've been following the stock market, especially in 2025, there has been a relatively soft equity market, very few IPOs taking place, so that the investment portfolio has not been growing at the same rate. And then on the food side, we did see growth of 6%, which is actually over $7 billion. Here we saw very good growth on our international side of the business. Our domestic business did grow, but it would have been somewhat tempered by the impact of Hurricane Melissa. So if we switch over to the profit side now, as I mentioned earlier, Hurricane Melissa and some other logistics matters would have impacted the group. So you do see a decline across the business segments for 2025. I mentioned it earlier in terms of our money services businesses affected by tightening margins, as well as some technology costs that would have gone towards enhancing our digital products. Because one of the aims we have, as you saw from the GK1 app, is that we want to offer a lot of these products digitally to give more convenience and choices to our customers. So that investment would have brought some additional costs in the interim. On the insurance side, the main factor here representing that decline would really be from the claims from the insurance claims in relation to Hurricane Melissa from our customers. And then on the banking and investment side, very, very marginal decline here, primarily as a result of our investment side of the business in terms of lower trades and lower equity trades and stockbroking income, and also some provisioning for credit losses. But of course, our commercial bank continues to grow well and also represented well in Barbados from Signal Globe or Merchant Bank joint venture there. On the food side, our international businesses did very well across the world, UK, US, Canada, and also Belize and the Caribbean. Again, though, it was negatively impacted in the local market in Jamaica from the hurricane. So just to tell you a little bit on the balance sheet, I kind of spoke to this already, but just to reinforce the fact, we had two kind of major milestones. One, this kind of red bar on here, you'll see that our assets continue to grow significantly. And so we're now up to over $260 billion in assets. And I did mention some of the major lines that moved earlier. And then the yellow bar you'll see is our shareholders' equity. First time over $90 billion in shareholders' equity. And then our debt to equity, which is really kind of representing the level of borrowings that we do, remains very stable, very consistent over the years. And this is a good indicator. And it's also low, relatively low. And so it does give us a lot of borrowing capacity to invest for the future through borrowings. In terms of our spend now, what are we doing to invest in the future? So you heard about GK1. We continue to enhance that app. It's not only remittances it can be used for. It can be used for now top-ups, insurance renewals, credit card applications, and a range of other services in our GK Financial Group. What you'll see is that for 2025, we invested over $4.8 billion, and it's a combination of property, plant, and equipment, as well as technology. So we would have invested in our factories, improving and enhancing the equipment there. We would also have invested in our retail through the high-low stores, enhancing some of the stores. We'd have also expanded the distribution center, as was mentioned earlier, and commissioned our cold storage at a distribution center in Jamaica. And then, of course, we did mention the technology investments as well. And you would see a dip in our return on equity, again, primarily driven by the hurricane last year. So I will then now just close out by giving some very brief highlights on our first quarter 2026 results. So you'll see on the revenue side that we had growth overall in revenue, a 7.4% growth in revenue. And you'll see that most of our segments showed increases. A very marginal decline for money services business. However, you'll see that insurance, banking, and our food segments all showed growth in revenue for 2026 first quarter. And then if we touch on the profitability, you'll see that the group had a good showing for profitability, growing by 11.8% over last year. And you'll note that 3 of our 4 business segments have shown growth. Notably, I would say for our money services, even though there is a decline in the revenue, you'll see that our profitability showed a modest growth. So what we're seeing is stability on the money services side, which is that purple bar on top. The only segment to actually show a decline was our food business, which you see is very slightly down by 1%. And that's really because our domestic food businesses are still recovering. So as was mentioned earlier, we had the high-low food store closing after Hurricane Melissa, and it remains closed, and we are working very, very closely to have that one reopened in the shortest possible time. And our meat factory, we worked very hard to have that one reopened. It is reopened, and you'll see the products on the shelf, but it does take a little time to get back to full capacity, and so that's what we're working on. But you would, in the interim, you would have had a decline in the domestic food businesses in terms of profitability. On the international food businesses, though, all of our major entities on the international food side would have recorded growth in profitability for Q1. And then you see good growth for our insurance businesses, led primarily by our general insurance businesses growing and showing increased profitability for the first quarter, and that's the green bars that you are seeing in the middle of the screen. And then also notably, for our banking investments, you will see profits doubled for the first quarter of 2026, represented by improved performance, both for our commercial bank as well as our investment portfolios. And with that, I'll close out But I just want to say again, for Q1, you see we have shown a recovery compared to 2025. And so we are very hopeful and very excited about the rest of 2026. Thank you.
Thank you very much, Frank and Andrew. I'd like to use this opportunity to, on behalf of the board, congratulate Frank on his first full year as GraceKennedy's Group CEO and commend him and the executive team on a job well done. Please join me, ladies and gentlemen. Ladies and gentlemen, we will now take the next 30 minutes or so to answer your questions. Frank James, our Group CEO, will answer questions with the assistance of GK's senior leadership team. Madam Secretary, we will now take questions from the floor first. Is that correct? So I invite questions from the floor. And if you are reluctant, I think the Secretary already has a number of questions lined up online. Yes, Mr. Livingston.
First one is the stock split. Can you give a little explanation on the stock split, please?
You said first one. How many do you have, sir?
No, it's a question I asked. What it, man? But I have all past shares, but I say the stock split.
We're going to answer it. We're going to answer it, but I'd like to know, so maybe I can invite Frank and Andrew to come up and
I just say one minute and then we come back.
All right. Go ahead, Andrew.
Thank you for that question. And so in relation to stock splits, we have not had a stock split in recent times.
No.
Oh,
That one, no. The stock split, how much here? About 2 years? Something? I don't quite remember. Stock split, I let me ask about.
Well, if you refer to the buyback, because the last stock split we had was actually in 2016. We haven't had any since 2016. But if you're referring to the share buyback, which took place during 2024 and 2025, yes, we did have a buyback program, and that was concluded.
Mr. Chairman, you're not getting me, now. The stock split I'm not talking about much percent because we're not seeing any growth in the shares, and that's why I'm asking about the stock split.
Is it, Livingston, that you are recommending that we consider a stock split?
No, man. We're talking to make a stock split, and we don't see any growth. And the stock split, so I get your explanation on it.
But
No,
There was a stock split, and we asked, we don't see, on the shares, we don't see any growth.
so Livingston, you're either confusing the stock split
no,
with the
no,
share
we-
buyback, or you're confusing with the company. We didn't have a stock split in the recent.
Yes, man,
Last
me did
year.
get some. Me did get some of the stock split. I did get some.
So we did a stock split in 2016.
That's right. Yeah.
Livingston.
Yes.
In 2016, and the share price actually did increase after 2016. Stock split may have something to do with it, but it would also have been the financial performance of the company. So our focus, Livingston, is to make sure that we deliver strong financial results, and we believe that by doing that and executing the strategy that we outlined, you will start to see an improvement in the stock price in future years as the market also recovers.
You see, Mr. Chairman, me just say, me not better go in and find something. You see, me love business, you know. Me observe. Me invest with you. I observe everything about my investment. You understand? So me not eat that shareholder. All right, me come back again here.
Thank you, sir. Any other questions? Gail, are there any?
We have the questions that came in by email, Chair.
Yes, sir. Mr. Elliston.
I've always liked it. Well, my name's Arthur Ellison. I've always liked the idea of our company looking forward to being listed on an international stock market. I believe you had some comment on that at our last AGM, CEO. Do you care to expand on it somewhat to let's see where we might be moving toward that? And of course, increasing the value of our holdings.
Sure, and I'm going to really ask our group CFO to talk about that. But the primary thing is when we have met with our investment bankers, they said it is a good idea based on the way that we have been growing the business globally, but the timing of it is important and when we do that. So that's what I'm going to ask Andrew to speak a little bit about how we determine what is the appropriate time to make such a move if we make such a move.
I'm sure he'll tell us the right thing.
Thanks. So, yes, this is something that is on our time horizon in terms of where we want to take the group long term. What we see is that to list on an international exchange, there are certain key factors that shareholders on the international market are looking for. They're looking for a certain size, and they're also looking for a certain diversification in both your revenue and your profitability. So things like what percentage of your revenue is in the developed market, and also what's your plan and how have you demonstrated that you've had success in growth. And so we have been showing improved diversification where both revenue and profits have grown overseas, and we have been growing in particular in the major diaspora markets like the US and UK and Canada. So we're on that journey and we are showing improvements. What I'd say is we still have a little time to go in terms of what ratio the international investors would be looking for, but we're definitely on the journey and we're definitely showing a trend, a positive trend towards it. I can't give a timeline as to exactly when because we would need to also see what's a good timing for when the market would be most receptive to that type of international listing. But it's definitely something that we continue to look towards and plan towards.
Thank you, CFO. And may I comment that with the path you've been on over the past year, we can be assured, I'm sure, that we will get to where we're going. Thank you again.
Thank you, sir. I'll now ask the first of the questions that have come in online. Frank, the question is, can it be interpreted that the dairy industry's consolidation is what has led to a higher profit before tax for the overall group earnings in Q1 2026? Dairy Industries does at least $1 billion in annual PBT, but GK only reported half of that accrued net profit in Q1 2020. It says 2025, but I think he meant 2026.
Right, thanks. And I think that question came from David. Thanks very much, David. Rose, there are three primary factors that have led to the improvement in our PBT. One is our banking and investment segment, where we have seen a doubling in profits. That, of course, will not have anything to do with dairy, but a doubling in profits in that business. Andrew would have spoken to the growth in the loan and deposits portfolio, and we have also seen an improvement in the performance of the investment business. The second one is our insurance business, where we saw profits growing over 14%, so double-digit growth in our insurance segment has also driven that. And then thirdly, our dairy industries acquisition, which is reflected in the food segment, which while showing a slight reduction in profitability, the impact of dairy was definitely positive, and therefore the domestic food business, which is really where we saw the reduction in profitability, as Andrew spoke to, was offset by the positive benefit of the dairy acquisition.
Thank you very much, Frank. David Rose also asked, or said, GraceKennedy has been doing a lot more insular acquisitions by acquiring minority interests over the past 5 years, as seen with Catherine's Peak Bottling, Key Insurance, CSGK and their industries. Apart from a general mergers and acquisition update for GK, is the move to acquire minority interests meant to strengthen your market leading position in businesses you believe in?
Thanks again, David. So, yes, that is one of the factors. Certainly, these businesses are all businesses that we believe in, and we see opportunities for growth. We have taken different strategies with our acquisitions. Some we start as a minority interest with an understanding of how we are going to become the majority shareholder, and we do that over time. That can both manage our risk as we go into new areas, but it also allows us to build out the business as we pursue those acquisitions. Some of it, though, is to really focus on the areas that we are strongest in, while our partners focus on the areas that they are strongest in. So you mentioned dairy as an example, and that's a perfect example. We have an excellent relationship with Frontiera, who was our partner for many years in that business. However, we have always brought to the table our brand marketing strength as well as our manufacturing capability, and they have brought to the table their expertise in raw materials and ingredients. And so by us buying out their share, it allows them, because we are in an agreement with them where they continue to supply us with raw materials and ingredients, it allows them to focus on their core strength while we focus on our core strength of brand building, distribution, and manufacturing.
Thank you. Thank you, Frank. Still not seeing any hands here. The next question, I think, may have been written before your presentation was complete, Frank, but I think it bears asking because it allows us to reinforce the status of some of our key assets. It says, the question is about current market disruptions. What is the status of the GK meat factory in Westmoreland? How has the Hurricane Melissa event impacted operational capacity across the business in 2026? And how is GK navigating supply chain disruptions and higher costs from the global commodity shock and geopolitical shakeup?
Thanks for that question, David. And I think I saw Carl Barnett here earlier. And he's drove in from Savlamar just for the AGM and heads our meats factories. I'll ask him to join me in answering this question. But the meats factory, as we said, we are very proud of the team that they got it up and running by the end of December. It was no easy feat, but we're not up to full capacity yet. And therefore, we have a plan around how quickly we want to be able to meet the demand. Because the truth is, there's very strong demand for Viennas and Franks, and we are still trying to meet that demand. And Carl can speak more to that and some of the things that we have done in terms of being able to get more product out of the factory. Just ahead of that, though, just generally speaking, is Zach Mars here? If not, I will just mention that the supply chain disruptions is something that we take very seriously and have been actively working as an executive committee. The truth is, we have been focused on improving and enhancing supply chain from long before this issue of the Strait of Hormuz, because we saw it in COVID, the impact. And so we started on a program from the beginning of COVID, really to enhance our supply chain and logistics expertise. It included training our people, it included investing in new systems, it included revamping our business processes, and really getting greater sight of our products as they move all across the globe so that we can anticipate them. We have also, through the implementation of our S4HANA, been able to further improve our supply chain. We have seen big improvements in our availability service levels as a result of those investments in our supply chain. And we have been diversifying our sources of supply very actively over the last 5 years. So all of those have actually put us in a very good position. It doesn't mean that these shocks don't affect us, but we are in a much better position today because of the investments we made over the last 5 years in our supply chain. The higher costs are a reality, and you would have seen in the media where we have passed on some of those higher costs to our consumers. Clearly, as a business, we wouldn't have been able to absorb all of those. But what we have also been doing is very focused on how we can take cost out of our operations so we can limit how much we have to pass on to the consumer. We're also very focused on what we call our value innovation. So our Caribbean choice brands and even finding ways to create bundles for our consumers is a key focus in terms of managing the impact of these costs on our business. You'd have seen what we're doing around energy costs, which has saved a lot of money, and what we're doing around technology. So with that, let me ask Carl to speak specifically to meats and how we're going to get up to demand levels for our meat products.
Thank you, Chair, and good afternoon, everyone. So the Hurricane Melissa was really devastating at Meat Division in Westmoreland. Almost every single one of our roof at the facility was impacted somehow. In addition, our entire solar farm was completely devastated. Many of our employees' homes were impacted, and it was a really, really difficult time. But I want to thank the employees, our maintenance team, all of our employees came together and implemented a plan of action to get the plant back up and running. I want to thank the execs for their support, and all of GK really came together and made it very possible for us to get up and running. During this time period, November and December, we took the time, we got the plant up and running, and we started production in January. As you can imagine, because of all of our roofs being damaged, there was a lot of our raw materials and packaging materials that were impacted. So it wasn't until about March that we really started getting up and running. And we're now running a second shift so that we can get the Viennas and other products all on the shelf. So thank you.
Yes, sir.
Pleasant good afternoon, Lanzel Bloomfield here. Mr. Chairman, page 123, I have 3 questions. Page 123, total liabilities. Mr. Chairman, in 2024, your total liabilities stood at 145,234,581 billion. And in 2025, this line item has jumped to 169,876,250 billion. What is being done to reduce your total liabilities?
Okay, thank you, Mr. Bloomfield. So, in terms of liabilities, it's about management and effectively managing your liabilities. Liabilities going up in isolation isn't necessarily a bad thing, because you could have assets also growing. And sometimes the liabilities are supporting those assets. So, a big line item you would see is our deposits, which are really customer deposits, growing by approximately $9 billion. So what happens is, when customers of the bank place funds with us, that is increasing our liability. It's not a bad thing, because in fact, we then use those deposits to lend to our customers through the loans. And we also use those deposits for investment purposes, which is why you're seeing things like our cash and deposits also going up. So again, it's about prudent management of those liabilities. You would also see payables going up. Payables are going up in relation to things like insurance claims, but we do have that backed by reinsurance, our reinsurance program, which is why on the receivable side, it also showed increases. So again, we're being very prudent about looking at our liabilities, looking at our obligations, and utilizing our assets to make sure that those liabilities are supported. The important thing to note is on a net basis. So when you subtract the liabilities from the assets, you would expect that the number should go up, and that is exactly what's happening. Because our equity, because that's the difference really between your assets minus your liabilities. You would note that in 2024, it was $86 billion. And in 2025, it has gone up to almost $92.9 billion. So overall, it's a more effective use on our balance sheet, where even though the liabilities are going up, the assets are actually growing faster than the liabilities, and that's an important measure for us as well. So yes, we continue to prudently manage the liability position, but quite likely as the group continues to expand, you would see increases in liabilities, but you have to make sure your assets are growing faster.
Okay, thank you, and that. Same page, 123, note 6. Mr. Chairman, in 2024, your pledged assets was 78.77 million. In 2025, this has increased to 685.742 million. What are these pledged assets? Please clarify.
Okay, thanks for that question. So pledged assets are really assets that the company holds in order to support certain liabilities. So on the balance sheet, you'll see the second line of the liabilities shows securities sold on agreements to repurchase. That moved from 75 million in 2024 to $658 million. And what those are obligations that we have to some of our investment customers. And so to make sure that we are securing those liabilities, we actually pledge some of our assets to those customers. So those two lines move directly in tandem. So what happens is when our customers place funds under those repo liabilities, we back them by pledging some of our investment securities to the customers as security. So that's why it's going up, because you'll see on the liability side, those repo liabilities have gone up and the assets have been pledged to secure those liabilities. In the event that they get paid down, then we can remove the pledge on those assets.
Okay, last question. Page 233, note 26. Mr. Chairman, in 2024, your occupancy cost was 4,118,761. And in 2025, this has climbed to 4,583,775. Please give us some clarity on this line item.
Okay, thanks. So in relation to occupancy costs, that is a range of costs related to premises that we occupy. So it would include any rental costs that we have. It would also include, things like utility costs, maintenance costs, so electricity, light, as well as the upkeep of those premises. And so part of this is driven by inflationary costs, in terms of you do have situations where your landlord may increase rental from 1 year to the next, and that's built into the tenancy agreement. But also, we do have situations where we're growing and we're renting new premises. So, an example would be in our USA operations, where we have new warehouse facilities in Atlanta. So we would have expanded to that state in order to grow further. So what we do have is a combination of some inflationary costs, but also expansion into new territories, and that will come with associated rental costs.
Thank you very much.
Thank you, sir.
Mr. Chairman, Livingston, you know, so the workplace, I was lunchtime, I see the thing come from my phone, say, GraceKennedy occupy the new dairy, something. I say, good, and I think smart. All right. When I was a boy, milk come from cheese, So when I was a boy in the country, I like hot bread.
The other way around.
With cheese. You understand? Explain to the shareholders what are the plans to grow the dairy thing they want to invest in.
All right, thanks very much, Livingston. Excellent question. The acquisition was supported by a strong business case around growth. And so there are a number of areas that we want to see growth. One is innovation. This business has largely been around tasty cheese, but over the last 6 or 7 years, we have diversified into a number of other products like sour cream, yogurt.
Repeat that one again, Mr.
Huh?
Repeat that something with that, sir.
We have diversified into new products. So the dairy factory is going to be able to produce new products that we think will be able to expand and grow our revenue. Things like sour cream, shredded cheese, the cheese that I showed you earlier today, this squeezy bottled cheese sauce. So there are a number of other dairy products that we think we can expand into. In addition to which, our traditional cheese in a can is continuing to grow, and we are finding new markets for that cheese. So the other thing is to drive our export growth and to find new markets for both our cheese and the other dairy products. So innovation and geographical expansion are two of the key drivers. Again, efficiency is going to be a key driver of the profitability growth. Now owning 100%, there are opportunities for greater synergies, which will also be driving to improve the bottom line as well as the top line.
All right, Mr. Chairman, can I turn to page 178? Note 3C. Dear Mr. Chairman, as at December the 31st, 2025, 1 to 3 month, 3 to 12 month, 1 to 5 month owners. All right, you see here right here, subsidiaries sold under agreement, purchases, bank and other loans. What made up this bank and other loan of 8,800,000 and securities sold under agreement of 5,049,400? Explanation, 1 to 3 months.
Okay, thanks. Thanks for that. So this is really speaking to our liquidity risk for certain liabilities, and it's showing the different time periods in which we have to repay these obligations. So in relation to securities sold under agreements to repurchase, it's really saying that within that 1 to 3 month bucket, 549 million is due within that time frame. And I mentioned it earlier in terms of what this is. These are really amounts placed by customers or investment customers with our investment house. In relation to bank and other loans, these would be amounts that we have borrowed primarily to fund things like capital expenditure and working capital. And so again, if we look at the various time buckets as an example, for the 1 to 3 month category, $8.8 billion is due within that 3 month period. And so it's really showing the points in time that we have to make repayments on these loans.
Mr. Chairman, looking at center this group, 1 to 5 months. What does signify the dash between 1 to 5 months? What that signify under security agreements?
Okay, so in relation to when you say a dash, that really means that there's no value there. It's really a zero, but we represent it with a dash. So there's no amount in that particular time frame.
Look at the bottom part, trading and other payables. What made up this trading and other payables? 22,200,000. Explain to me. 1 to 3 months.
Yes, so the trade and other payables represents amounts that we owe. It can be for a number of reasons. The main one I would say is in relation to our suppliers, where when we buy food products, we would owe our suppliers for these amounts. And so it's showing that within that time frame, we would be owing some of our suppliers. But there are other obligations there as well. You know, things like we would owe statutory obligations, we would owe for utilities and other obligations.
All right, thank you very much, Mr. Chair.
Thank you very much, Livingston. We're almost out of time, but David Rose, Stephen asked a question which he directed to you. And it goes, there is an increase in market consolidation in the Jamaican financial sector. How is GraceKennedy positioning itself to build its capacity in capital markets and insurance? Also, how is it expected that Twin Peaks, Basel III expected to impact the capital allocation plan in GK's financial services?
Thank you. Thank you, Mr. Rose. So yes, there is quite a bit of consolidation in the financial services sector, and I think from what we heard Frank talk about earlier today, GK has been quite active in that consolidation. So they continued the finalization of the acquisition of Key Insurance as a delisting and bringing our share to 98.9%. Plus, over the last few years, we've also added the GK Life business across the region and over a series of transactions. So I think Mr. Rose is correct. There is a lot of value in the consolidation in the industry because people see that as an opportunity for scale. And as we do here at GK, scale gives you the opportunity to price your products effectively and to really build on the strong market positions that we have already in our money services business, where we are the leader in that business in the region, and other industries like allied insurance brokers, where we are the leading insurance broker in Jamaica. Other areas like our general insurance business, where we are a very, very large player in the Jamaican market. And so I think consolidation is a big part of our strategy, and we are very much aligned with that. As it relates to capital and the use of capital, I think Mr. Rose was mentioning what is happening, and I would just shortly respond by saying that we believe that capital should be allocated where it's going to get the highest level of return. And so we've been working continuously looking at the industries, looking at what is changing in the respective industries in which we operate in, and as a group, focusing on allocating our resources where we think we will be able to generate the highest level of return to our shareholders.
Thank you very much, Stephen. We're almost out of time, but I'll ask this one because at least two people have asked the same question. This one is from Elaine Maxwell Barrett. Is there a significant financial impact resulting from the new tax on sugary drinks? What change did we make in the advent of this new tax?
Thank you for that question. Yeah, there has been a meaningful impact. You would have seen where we have had to pass on a price increase to the market. Now, that price increase is not just driven by the sugar tax. There are other things that are impacting that, like raw material and packaging costs also going up. We have tried as best to minimize what we have to pass on, but clearly we would have had to pass on some of that impact. The good news is that our process around reducing sugar started long before the sugar tax. So we have had a very active process in looking at what we call our better for you products, and taking both new products that will fit that bill, but also taking existing products, including our beverages, and reducing sugar over time in those, or replacing sugar with alternatives. So we are already on that journey, and it is something that we actively are pursuing through our Global Category Management Unit. You will also see here on the table that we have the best water in Jamaica and the Caribbean, or Catherine Speed and 876 waters. And so we encourage persons also to make sure they're having their intake of water. So we are diversifying the options for our consumers and making sure that they have available products to choose from.
Thank you very much, Frank. Ladies and gentlemen, we are now at the end of the time allotted for question and answer. Yes, sir. Yes, Mr. Ellison.
A few moments more.
Sure, sir. For you, we'll take one last question.
Thank you. You spoke a little while ago, CEO, about the value of a top-up which will be added to our apps. Would it be have capacity for the Bank of Jamaica's Jamdex, which I understand is also going to be a cheaper operation for you who might go in on it?
Great question. I'm going to ask Stephen to speak to the question of CBDC and Jamdex and our view on that. Stephen?
Yes, so we are very, very much focused on a digital way forward for our businesses. And Central Jamdex is a critical part of the Bank of Jamaica's plan moving forward. We have looked at it in from our banking perspective, as well as from our digital wallet perspective, and are certainly open to incorporating it into our plans. For these things to work, there has to be a nationwide ecosystem for not just for the wallet to be able to facilitate the Jamdex transactions, but for people at various points of sale all across the country to be able to use it there. And so it is a part of a process that we are open to contributing to, and so we'll be working, our digital teams and our banking teams will be working with the central bank over the months and years to try and make sure that its rollout is as successful as possible.
Thank you.
Thank you. Thank you very much.
Thank you very much, Mr. Edison. Thank you, Stephen. As I was about to say, we are now at the end of the time allotted for question and answers. And we thank Frank, Andrew, Stephen, Carl, and the others who contributed to this segment. We turn to another very important part of our meeting today, the auditor's report, the director's report, and the audited group accounts. Shareholders, this serves to advise that the auditor's report, the director's report, and the audited group accounts have been tabled for this meeting. A copy of these reports can be found on pages 113 to 122, 92 to 93, and 123 to 127, respectively, in your annual report. With your permission, I will take the director's report as read. Thank you, shareholders. I now invite Ms. Anicia Boyd of PricewaterhouseCoopers to read the auditor's report. Anicia?
Thanks, Professor Shirley, and good afternoon, everyone. Independent Auditor's Report to the members of GraceKennedy Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and standalone financial statements give a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at December 31st, 2025, and of their consolidated and standalone performance and their consolidated and standalone cash flows for the year then ended in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act. What we have audited. The group's consolidated and standalone financial statements comprise the consolidated financial position as at December 31st, 2025, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position for as at 31st December 2025, the company income statement for the year then ended, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statement comprising material accounting policy information and other explanatory information. Basis for our opinion. We conducted our audit in accordance with international standards on auditing, ISAs. Our responsibility under those standards are further described in our auditor's responsibility for the audit of the consolidated and standalone financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including International Independent Standards, issued by the International Ethics Board of Accountants, ISBA Code, as applicable to the audits of financial statements of public interest entities. We have also fulfilled our other ethical responsibilities in accordance with the ISBA Code. Our audit approach, audit scope. As part of designing our audit, we determined materiality and assessed the risk of material misstatement in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involved assumptions and considering future events that are inherently uncertain. As in all our audits, we also addressed the risk of management override of controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. How we tailored group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. Key audit matters. Key audit matters are those matters in our professional judgment were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. We have determined that there are no key audit matters as it pertains to the standalone financial statements in our report. Key audit matter, valuation of insurance contract liabilities for insurance contracts group. Refer to notes 2R, 44, and 17 of the financial statements for disclosures relating to the accounting policies and balances. As at the 31st of December 2025, the total insurance contract liabilities amounted to 22.91 billion, or 13% of total liabilities for the group. Insurance contract liabilities are determined in accordance with IFRS 17 insurance contracts. The group is liable for all insured events that occurred during the term of the contract, even if the loss is discovered after the end of the contract term. As a result, liability claims are settled over a long period of time, and a portion of the claim provisions relates to IBNR claims. Management uses an external actuaries in determining the valuation of insurance liabilities, to which management applies a discount rate and risk adjustment factor for non-financial risk. The cost of capital method was used to derive the overall risk adjustment for non-financial risk. In the cost of capital method, the risk adjustment is determined by applying a cost rate to the present value of the projected capital relating to non-financial risk. The bottom-up approach was used to derive the discount rate. Under this approach, the discount rate is determined as the risk-free yield adjusted for differences in liquidity characteristics between the financial assets used to derive the risk-free yield and the relevant liability cash flows, known as the illiquidity premium. The risk-free premium was derived using government bond rates available in the market denominated in the same currency as the product being measured. We focused on this area due to the complexity in actuarial methods and significant management judgment applied to the discount rate, risk adjustment factor, and claim settlement pattern. How we addressed the key audit matter. Our approach to addressing the matter with the assistance of our actuarial experts included the following procedures, amongst others. Evaluated the accounting policies for material changes, updated our understanding of management's end-to-end process and controls supporting the determination of insurance contracts, tested on a sample basis the completeness, accuracy, and reliability of the insurance contracts and related claims to source documents as it pertained to premiums, unearned premiums, claims outstanding, and claims paid. Assessed the independence, experience, and objectivity of management's actuarial experts. Evaluated the suitability of the methodology used by management's actuary in establishing insurance contract liabilities against established actuarial practice and/or knowledge and experience. Performed a methodology and assumptions assessment of management's determination of discount rates and risk adjustment in the actuarial valuation considering market data and component-specific facts. Evaluated and tested the reasonableness of management claim settlement pattern by inspecting historical information and sensitized the outputs to evaluate for management bias. Compared the loss development patterns, which are used to discount the reserves, to the claim settlement patterns and recalculated the discount rate applied to the insurance contract liability. Recalculated the risk adjustment factor based on management selected distribution and confidence level for future loss emergence. Key audit matter: loans receivable and debt securities, probabilities of default, forward-looking information, and significant increase in credit risk. Refer to notes 2H, 3CI, and 4.8, notes 6 and 9 to the financial statements for disclosures related to accounting policies and balances. As at the 31st of December 2025, the group's loans receivable totaled 51.02 billion net of impairment. The group's net investments measured at amortized cost and fair value through OCI totaled 61.35 billion net of impairment. In aggregate, the above exposures represent 42% of total assets at the reporting date. The resultant impairment recorded under the expected credit loss ECL impairment model amounted to 2.15 billion for loans receivable and 656.2 million for debt investments. In assessing impairment, IFRS 9 financial statements prescribes a forward-looking impairment model which takes into account reasonable and supporting forward-looking information, as well as probability of default. PD represents the likelihood of a borrower defaulting on their obligation over the next 12 months or over the remaining life of the obligation. The 12-month and lifetime PDs are determined differently for loans receivable and debt investments. For loans receivable, management developed PDs based on group-specific historical default rates for each industry classification. In performing historical analyses, management identified economic variables impacting credit risk and ECL for each portfolio. For debt investments, which include sovereign and corporate securities, PDs are developed by reference to external data collated by Standard & Poor's S&P with adjustments for industry and country-specific risks where appropriate. The estimation and application of forward-looking information require significant judgment. Stage 1 and Stage 2 credit loss allowances are modeled based on macroeconomic variables or changes in macroeconomic variables, which most closely correlate with credit losses in the relevant portfolio. Each macroeconomic scenario used in the ECL calculation incorporates forecasts of the relevant macroeconomic variables. In the event of a significant increase in credit risk, an allowance or provision is required for ECL, resulting in all possible default events over the expected life of the financial instrument lifetime ECL. The consideration for days past due, as well as adverse changes in the borrower's credit rating, industry, or the economic environment are factors considered in determining whether there has been a significant increase in credit risk. The estimation of ECL in Stage 1 and 2 and Stage 2 is a discounted probability-weighted estimate that considers a minimum of 3 future macroeconomic scenarios. The base case scenario is derived from macroeconomic forecasts, which are publicly available. Upside and downside scenarios are set relative to the base case scenario based on reasonably possible alternative macroeconomic conditions. We focus on this area due to the complexity of the techniques used to determine PDs and to identify significant increase in credit risk and a number of significant judgments made by management regarding possible future economic scenarios as it pertains to loans receivable and debt investments. How our audit addressed the key audit matter. Our approach to addressing the matter with the assistance of our valuation experts included the following, amongst others: updated our understanding of management's ECL model, including any changes to source data and assumptions, tested the completeness of all loans receivable and debt investments to determine whether all items were included in the ECL models by agreeing the models to detailed loans and investment listings, evaluated the reasonableness of management's judgments pertaining to PD, significant increase in credit risk, and forward-looking information, including macroeconomic factors impacting the weighting of the scenarios as follows. PD. Tested the critical data fields used in the ECL model for the PD determination, such as default rate, effective interest rate, write-off data, and loan type by tracing data back to the source documents and external market data where applicable. Recalculated days past due, a key data input into the PD parameter in the group's banking system on a sample basis. significant increase in credit risk. Evaluated staging of the loans receivable on a sample basis and compared our results to those identified and classified by management. Debt investments. PD. Tested the critical data fields used in the ECL model, such as the maturity date, amortized cost, accrued interest, credit rating, and interest rate by tracing data back to the relevant source documents. Agree the credit ratings and historical default rates used to calculate the PDs on a sample basis to external sources such as external rating agencies. Significant increase in credit risk. Tested on a sample basis the accuracy of the initial credit risk and the credit risk at the reporting date using rating agency definitions of investment grade, and evaluated the appropriateness of the group classification of debt investments at stage 2. Performed an independent qualitative assessment for a sample of borrowers to determine if there was any adverse public information affecting the criteria used to perform the staging. Inspected the financial statements of a sample of borrowers to determine if there was any significant downturn in financial performance and aid in assessing the staging of borrowers. Forward-looking information, loans receivable and debt investments. Assess the reasonableness of the group's methodology for determining economic scenarios, including the appropriateness of the gross domestic product and unemployment rate, economic factors utilized by management. Evaluated the reasonableness of the weighting used for the upside and downside scenarios by agreeing forward-looking economic information to external sources published or pronounced by reputable third parties. Sensitize the probability weightings using the expected credit loss calculation. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and/or auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that gives a true and fair view in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act, and for such internal controls as management determines is necessary to enable the preparation of the consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company, the group, or the company, or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Auditor's responsibility for the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high-level assurance, but is not a guarantee that an audit conducted in accordance with the ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually and in aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purposes of expressing an opinion on the effectiveness of the group and company's internal control. Evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting based on the audit evidence obtained, whether material uncertainty exists related to the events or conditions that may cast significant doubt on the group or company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or the company to cease as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Plan and perform the group audit to obtain sufficient appropriate audit evidence regarding the financial information of the entities or business units within the group as a basis for forming an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and review of the audit work performed for the purposes of the group. We remain solely responsible for our opinion. We communicate with those charged with governance regarding, amongst other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence where applicable, actions taken to eliminate the threats or safeguards applied. For the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore key audit matters. We describe these matters in our audit report unless law or regulation precludes public disclosures about the matter, or when in extremely rare circumstances we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept, so far as it appears from examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith, and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Paul Williams. Signed, PricewaterhouseCoopers, Chartered Accountants, Kingston, Jamaica, March 2, 2026.
Thank you, Ms. Boyd. We have to invite you back because that's the shortest audit report we've had in a decade. We will now consider resolution number 1 in the notice. Resolution number 1. May we have a motion that the audited group accounts for the year ended December 31, 2025, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Livingston, moving. Mr. Ellington, seconded. We will now, so moved, we will now take the vote. Shareholders, I invite you to cast your vote by raising your paddle. I think the Madam Secretary had indicated. You'll put them up, yes, put them up. And those online will vote. You have 15 seconds to do so. Thank you to the shareholders in the room.
All four.
Shareholders online have voted.
Okay, the shareholders online have, yes, Frank, have voted. So the motion, the results are in, and I declare the motion carried. Second resolution is the approval and ratification of dividends. May I have a motion that, as recommended by the directors, the interim dividend paid on 7th April 2025, 20 June 2025, 22nd September 2025, and 17 December 2025 be and are hereby declared as final, and no further dividend will be paid in respect of the year under review. I invite a motion.
Name?
Thank you, Ms. Campbell. Seconded.
Name?
Yes.
Thank you, Ms. McFarlane. It's been moved and seconded. We now take the vote. Shareholders, I invite you to cast your vote both online and if you can show your paddles in the room. Yes, sir. Oh, okay. I'll ask against. Thank you, Livingston. I think the results are in. I declare the motion carried. Next, we move to the approval and election of director. The next item, this item is related to the election of Director Jackie Wright. Dr. Jackie Wright holds a Bachelor of Business Administration in Computer Science and Accounting from Baruch College and Executive Education from Stanford University. She also holds honorary doctorate degrees from the University of Bath and Aston University. Dr. Wright is an information technology professional and an independent board director. She's a patron of the British Council and an advisor board member of Oxford University's St. Martin's School. Dr. Wright is a member of the GraceKennedy Corporate Governance and Nomination Committee. Please note that further details about Jackie Wright are available on our website and in our 2025 annual report. In accordance with Article 108 of the company's Articles of Incorporation, Jackie Wright, having been appointed to the Board of Directors since the last annual general meeting, will retire from office and, being eligible, offers herself for election. May we please have a motion that Dr. Jackie Wright be and is hereby elected a director of the company. Livingston moves. Seconded? Seconded. Frank James has, oh, sorry.
I'm happy to second it.
Okay, Mr. Elliston. Thank you, shareholders in the room. We now move to the vote. Shareholders, I invite you to cast your vote here in the room and online. See many hands up here, and I think we are just about finished online. The results are any against? The results are in. I declare the motion carried. We now move to the resolution for permission to re-elect and block those board members who are retiring by rotation. The directors retiring from office by rotation pursuant to Article 102 of the company's Articles of Incorporation are Mr. Andrew Masado, Dr. Indiana Mintakoy, and Mrs. Gina Phillips Black, who, being eligible, offer themselves for re-election. Mr. Andrew Masado is an accountant and finance professional with years of experience in consolidation, budgeting, and accounting standards. He became a director of GraceKennedy Limited in April 2019, and Mr. Masado holds a Bachelor of Science degree in accounting and a Master of Science degree in accounting, both from the University of the West Indies. Dr. Indiana Mintakoy is Deputy Executive Director and Senior Lecturer at the Mona School of Business and Management at the University of the West Indies. She also leads the Entrepreneurship, International Business and Strategy arm of the and sits on the school's board of directors. She has expertise in diasporas, migration, entrepreneurship, sustainability, and corporate governance. In February 2026, Dr. Mintakoy was appointed as Senior Global Fellow to the Center of Leadership and Global Impact, the School of Management, University of Buffalo in New York. Mrs. Gina Phillips Black is the chair of GraceKennedy's Corporate Governance and Nominations Committee. She is an attorney at law and partner of Myers, Fletcher & Gordon, and the head of the firm's commercial department. Mrs. Phillips Black advises on local and cross-border mergers and acquisitions and a range of corporate finance and regulatory matters affecting those in the financial service sector, including anti-money laundering. She's also an active member of the Jamaican Bar Association's Commercial Law Subcommittee and the General Legal Counsel's Proceeds of Crime Committee. Please note that further details about all our GraceKennedy directors are available on our websites and in our 2025 annual report. All directors presented here have an excellent record of board meeting attendance and participation. The board is satisfied that these directors continue to make a valuable contribution to the board and have demonstrated their commitment to continue serving as directors. May we have a motion that the directors retiring by rotation and offering themselves for re-election, that is, Mr. Andrew Masado, Dr. Indiana Mintakoy, and Mrs. Gina Phillips Black, be re-elected en bloc.
Jean Campbell is moving.
Jean Campbell, yes, move in. Daphne Disdale. Seconded. Doctor. So moved. We now take the vote. Shareholders, I invite you to cut.
Pardon me,
Yes, Mr. Ellington.
we don't have the microphone.
We're hearing.
I'd like to comment that whereas the information on the biographical information about these directors are mentioned, are located where you mentioned,
Yes.
Obviously, we appreciate that. And frankly, I think that it's supposed to pretty much settle the point I'm coming with. And that is that we like to be satisfied that the fact that you chose these fellow directors and you chose others too is something that should bring complete satisfaction to all our shareholders. It's not something which at this time concerns any of us, I believe, but we have the experience where directors re-elected to the board of a very large company here, which is in Jamaica, seem to have fallen down somewhere on not noticing that the accounting procedures were properly adhered to. And consequently, there's a bit of concern now about how the company's future is going to play out. I'm really mentioning it because we've had this kind of a faith in Grace for a very long time. And I'm sure you've been giving thought to being sure that when you ask us to support directors, it's because you know the directors support us and the company. I simply would like to mention it to let you know that I appreciate that and look forward to seeing it continue.
Thank you very much. Mr. Elliston. Yes, sir. We do take great care in the selection process for members of the board, and we do very rigorous evaluation of the performance of the board members and the specific issue that you raised of the very careful attention to the nature of the accounting processes as represented by both our external auditors but also internal auditors. We are very thorough with that, Mr. Edison.
Thank you very much.
Thank you for having made those comments, sir. May we have the motion that the directors retiring by rotation and offering themselves for re-election.
We had the motion.
The motion was moved. We vote. We now vote. Online.
Yes, 100% online.
100% online. And we have the majority in the room. The results are in. I declare the motion carried. Re-election of directors retiring by rotation. So having said that, we can reappoint them en bloc. May we now have a motion that Mr. Andrew Masado, Dr. Indiana Mintakoy, and Mrs. Gina Phillips-Black be and are hereby re-elected directors of the company. Moved.
Mr. Ellison again?
Mr. Ellison? Not seeing a second there.
Oh, Adam.
Ms. Campbell at the back. So moved. We can now take the vote. I invite you to cast your vote, shareholders in the room and those online. We now, having received the votes, 100% of the votes being cast online and seeing the majority in the room, the results are in. I declare the motion carried. Thank you, shareholders. We will now proceed to consider the resolution to approve the director's remuneration. May we have a motion that the amount shown in the accounts of the company for the year ended 31st December 2025 as fees of the directors for their services as directors be and is hereby approved, and that the compensation subcommittee, a subcommittee of the Corporate Governance and Nominations Committee of the Board of Directors, is authorized until the conclusion of the next annual general meeting to fix the fees of the directors. Can I have a motion? Pardon? The figures are in the annual report. Pardon? Yeah. All right.
We will consider it.
We'll consider that the next time around Livingston. Yes, sir, behind Livingston. Name? Ms. Gilmore. Yeah. Sorry about that. Yes. And Mr. Ellison. So moved. We'll now take the vote. Those in the room and those online. The results are in.
100% online.
I declare the motion carried. Resolution number 5 relates to the appointment of auditors. May we have a motion that PricewaterhouseCoopers Chartered Accountants, having signified their willingness to serve, continue in office as auditors of the company pursuant to Section 154 of the Companies Act to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. May I have a motion? Thank you very much, sir. Ms. Drisdale has seconded. Dr. Drisdale has seconded. So moved. We will now take the vote. Those in favor in the room? Those online? Not seeing the online ticker this time, Gail, but. Okay. Gail, it's carried both in the room and online. I'm not seeing it online, but. Holden?
Yes, Chair. There is an issue with the Zoom platform. It is not moving to the next resolution, and so we're just asking for a minute to resolve that.
Thank you for your patience, members. All right. Sure. Shareholders, we need to have a majority of votes to pass this resolution. We have approximately 80 persons in the room and about 50 online. We're having difficulty getting our online vote, but we would have a majority if everybody in the room who has their paddles and are supportive would raise those paddles. Can we see those? It looks like about 79 to me. Yeah. The results are in. I declare the motion carried. Shareholders online, we are very sorry that we haven't been able to count your votes. We trust that your views are consistent with those of the members, as they have been all evening, who are here in the room with us. Ladies and gentlemen, this concludes today's meeting. To everyone who attended our 2026 AGM, whether here in person or online, thank you very much for participating. I also extend appreciation to the hardworking GraceKennedy team and service providers and interpreters, all of whom helped to make today's meeting possible. I would like to acknowledge Frank, the GK executive and senior management team, my fellow directors, and all our GraceKennedy team members across the group for their commitment and hard work. In every challenge and every opportunity, our greatest strength is found in our unity and shared values. We look ahead with confidence to a future that reflects the very best of GraceKennedy. Thank you for your trust, your presence, and your continued belief in GraceKennedy as we move forward as one GK team. Good afternoon, ladies and gentlemen. Thank you very much.
GK Capital, in association with Trinidad and Tobago Unit Trust Corporation, is pleased to introduce GK Mutual Funds, the trust that helps you build your own wealth. Choose from any of our 3 mutual funds that best suit your financial goals. The GK USD Income Fund, an instrument to serve the vision you have for your business.